Put the spotlight on Coforge. Sudhir Singh is the CEO now joining in. Thanks so much for taking time out. To begin with, despite the fact that we've seen a bit of a tough environment, we've seen Coforge maintain the industry-leading growth. What is it that you're doing differently, and do you think that this outperformance can sustain?
At the end of the first 3 quarters, we are growing almost 14.5% year to date in CC terms. And the important thing about our performance, as you noted, is that this is organic 14.5% year to date growth at the end of the first 3 quarters. I suspect what we're doing differently is executing at a higher scale. And when I say executing at a higher scale, what I mean is I believe, forget suspect, I believe that we are able to retain the existing book of business that we have and then layer it with the wins that we are talking about. All of us as players in the sector, in the industry, record wins. The important thing isn't just recording new wins. It's A, being able to scale them up in the quarters to come. B, equally importantly, the book of business that one walks into a quarter or a year with needs to be obviously well defended and organically grown. So execution in many ways, not just this year, but over the last 6 years has been the differentiation.
Right. So you talked about deal execution, and that's always been the gap, right, for the industry. While deal wins were strong, but execution clearly was the problem. Any change in client scenario you foresee now?
Well, as far as client budgets are concerned, the budgets are locked and loaded. We're already into March of this year, and all of us have a sense in terms of what client budgets are. Given where the interest rates are right now, given the fact that there is still ambient uncertainty because of the war in Europe, at this point in time, the budgets that we are looking at for the current calendar year 24, are not materially higher than the budgets that we actually saw in play in calendar year 23. So to that extent, this year, from a demand perspective, is likely to be a repeat of last year. And when you have demand headwinds, which continue and are likely to continue in the current quarters, what is most likely to happen is that performance that you will see across players in our sector will also tend to continue to stay very differentiated as it has been in fiscal year 24.
Okay, so growth will continue to be differentiated amongst the players as well. But I just wanted to shift focus and talk to you about your own growth guidance as well. You started the year with a 13 to 16% kind of guidance. You're tracking 15% right now. But what about the growth rate for FY25? Directionally, at least, you see an improvement in FY25 growth rate versus FY24.
It's a little premature at this stage to call that out. The year has started with budgets more or less on par with what they were last year. Directionally, when budgets, the overall, the size of the sandbox remains the same, you would expect growth patterns to remain more or less the same. But still a little premature. We are going to close the current year and on the 2nd of May offer a clear, possibly a forecast for next year.
All right, and given that you have been clocking in $300 million plus deals for the last 8 quarters, what's the deal momentum looking like? Is there some sort of a slowdown, or do you think that this momentum can sustain?
No, deal wins continue to be the case. When we closed last quarter, we were on the cusp of closing an order executable, which is a next 12 months signed order book of about $1 billion. We were at $974 million. If all goes well, and we hope it will, we should close the year with $1 billion next 12-month signed order book. And that's going to be a big milestone for us. So large deals, the pipeline, the width of the pipeline, the conversion rates continue to sustain as they have over the last 4 to 5 quarters.
Right. And are these deals coming in at decent margins in terms of competitive intensity?
Yeah, well, what we call in the industry EN deals, which is existing new deals, deals that come from existing clients, deals that involve renewals, deals that involve expanding your market share, are coming at more or less the standard, the existing margins for the firm. NN deals, which are net new deals for us, is the space where one tends to see significant price competition. And some of those are seeing active discounting taking place.
Okay, so renewals are happening at similar rates, but in new deals, there is a bit of an active discounting. But you had laid out a roadmap of 50 basis point margin expansion. Is that on track at least?
We absolutely are. Next year, we do expect to drive our margins higher. We made significant investments through this year as the economy was slowing down, as the macros were getting more difficult to negotiate. Through the year, if you look at fiscal year 24, we have continued to add to our SG&A, and more specifically within SG&A to S&M, sales and marketing costs. We've already hit the 15% threshold. We will now sustain SG&A at 15%, and the rest of it should start flowing down to the margins.
And finally, on AI, are the projects converting from the pilot stage to the revenue stage? What's the update?
The way we're looking at AI capabilities, AI revenue, is that it's a diagonal that is now running across all the horizontal tech capabilities. There is absolutely no conversation. There is absolutely no proposal. There is absolutely no defense that is happening right now, where the solution that we are offering is not infused with or by AI or with a platform that is AI powered. So AI to that extent has become absolutely central to what we are doing. Fiscal year 25, we've closed our internal budgets. 40% of our incremental budgets for next year are going to see investments directly into the AI space. And this has a multitude of things. To begin with, this includes hardware that we are procuring, 8 NVIDIA units to set up our own AI lab, where we will be doing the smart model tuning on an ongoing basis. This includes the investments that we are making, very concrete investments in upskilling every employee when it comes to AI in the relevant AI technologies, cuts across all the service lines. It includes very hard work being done on the ground to reimagine every service offering that we have and to make it AI first.
Right, Sudhir, it's so good to have you on the show. Thanks for taking the time out and joining us today. On that note, we're going to take a very quick break, come right back. We've got a very